Okay, everyone, sip your coffee. Okay, so why don't we get started? It is, wow, it's a Thursday. Can you believe it? Thursday, November 19th, 2015. This is your daily Forex trading strategy session. Hey, yo, you know this kid? Said I didn't, but I know he did. Hey, my name is Wayne McDonell, Chief FX Market Strategist for TradersWay.com, an ECN that gives traders access to Forex and energies, metals, indices, binary options, and everything beautiful and happy in the world. We do these sessions to provide resources and tools so that you can develop skills to successfully and hopefully profitably trade Forex for many, many years to come, and you'll pay it back. What do I mean by pay it back? Well, we're putting these resources up here for free, hoping that you develop skills. So we're investing into you today and in the future when you feel confident to start a trading career. All you have to do is open a live trading account at TradersWay.com. And we'd like to be your prime broker for your successful currency trading business. Cool, huh? You guys ready to get going? I'm fired up. Let's go. There's my pips. See? Those are my pips. That never gets old. All right, so today's webinar is covered live at Forex.Today, where there's over a dozen trading ideas for the foreign exchange market today. How lovely is that, huh? Hey, trading's risky, not appropriate for everyone. Your past performance, good or bad, is not indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So as you know, we do these sessions every day, 7:30 in the morning at Forex.Today, Monday through Thursday, and every Friday, which is tomorrow, at FXStreet.com. I don't know what to do with this trade. I'm sitting right on 300 pips. Right on, like 301, 302 pips. And I'm right in between. I might get out. I might not. And I'll tell you what. Depends on the time frame that you're looking at, right? Is it time to get out? Is it, I could have wimped out a long time ago, I suppose. But believe it or not, I don't actually trade 24 hours a day. I know it's hard to believe. So there's nothing bearish about this, right? It bottomed out. We got the FOMC news. Okay, great. They want to raise interest rates, but, whatever. So it works its way up. There's nothing bearish about this on the hourly chart, is there? Okay. But then you go farther out, and we're only testing the real first, the first real level of resistance, right? You see this? If I go back into this area, let me get my drawing tool. That way I don't have to talk in code. Where did it go? All right, so yeah, if I look at this area here from this previous drop, and I bring it across here, this tells me there's nothing to freak out on the 4 hour, is there? I mean, this is only the first real test. Yeah, it's a 5.8 against me. Yeah, I'd like to stay below the 21. But, I don't know. I've been in the trade for a while, so, is it time to freak out? Well, here's where I entered. Yeah, so I have to make the decision. I guess that's the process I'm in. clearly, at least the the obvious stuff. Look where it reversed at the reversal pivot points, and that's why we have reversal pivot points, right? Oh wait, you don't. Oh, hang on. Let me fix this. Sorry. Okay. See what I'm saying here? What can we count on? What can we learn? Like, who cares about my trade, right? It bottomed at a obvious, logical, straightforward reversal point, right? The reason I have it green is it's the predicted bottom for the week. Just like this area was green for that week, that was the predicted bottom for that week. Okay? Obviously it went a little lower, but that's unpredictable. Okay? So at least, we got some logical, intelligent behavior going on. It did reverse at the double bottom. And very often when it does that, it'll come back and at least touch the weekly central. And then, of course, what I'm hoping is that we continue mission back down, never making a high higher than the previous high, which I'm identifying as this area here. Okay? Remember, you take that low, drag it across, and it's your new sell zone. So anyway, so I'm hoping we kind of maybe not even touch that weekly central, but I think that's a lot to ask. This says by the end of the day we should be heading back down. Well, Bob, in this case, this is just my, one of my fun accounts, right? So I'm not treating this as a true trade. There are many trades that have been added to this move, but our conversation back in here, who was it? Somebody anyway said, well, why don't you hang on to it and show us? And I'm like, okay, so I did. When is it a good time? Oh, well, yeah, I'm not going to lose, I don't think I actually have it on this chart. I guess I can add one. I would, mentally or emotionally, my stop's around 250. Because I'd like to stay in the trade, that's all. And so I'm going through this logic, and maybe I'm not making it clear enough. So let's tackle it again from a different point of view. I messed up my charts here. Come on, MT4. Let me get in there. All right. There's no technical reason per se for me to freak out. If I'm trading a downtrend and I'm a bear, okay. All we're doing is just testing the previous level of support. All right, so the trade shouldn't be over. Now you say, oh, but it's so many pips. Well, look, the market doesn't give a two hoots about your pips. Joe Muss says, what's your price target then? Well, I don't necessarily have a price target. Okay, so for example, as long as the Fed is raising interest rates and as long as the ECB is doing quantitative easing, both these currencies should be set up in valuations or changes in valuations that would move this down. So it's almost like, parity, Joseph says parity, and a lot of people care about parity, so I can't ignore it, but in my personal opinion, parity is pointless. But we know psychologically it's important. So do you guys remember when there was a coordinated intervention in the euro back in 2001, I think it was, when the euro dropped down to about 85 or something like that? And there was a lot of debate whether it was worth $1 or $1.10 versus the USD. But at that point, there was like speculative attacks and various other things going on in the Eurozone that was driving its valuation down. So major central banks around the world, like Canada, the United States, the ECB, Bank of England, and a few others, I believe, probably Bank of Japan, they all worked together and they propped up the euro to get it back to parity. So I can't ignore that because, last time we were below parity, there was central bank intervention. But other than that, look, I've looked at it and I priced it based on, I think I was on a daily chart, that this could go to 86 based on something I have somewhere. I can't even remember where it was. Maybe it's a weekly analysis. I just don't have it on this chart, I believe. But I think, yeah, it must be this. Here, let me get rid of this old channel. Apparently I don't go to my weekly chart very much. All right. I believe this is it. I'm just going from my brain here. Okay, if you look at this, this was the 382, which set up our original macro short, right? And that was pretty easy. And you can see how it came across, and a pretty obvious level to sell, right? So the question is, where does that 382 take us? Right? And so you go dun, 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 dun. Come on, MT4, give me some juice. Dun, dun, dun. Alerts are going off. Come on. Okay, 382 gets us right down here to 85. That just happens to be where there were, back in a bajillion years ago, 14 years ago. Can you imagine? 14 years ago, this intervention that kicked in happened right at that point. Isn't that funny? Exactly at that price, there was a coordinated central bank intervention to drive the euro back up to parity. And that actually failed. So let me tell you something that central bankers may not know, I guess because they keep doing it from time to time. And central bank intervention never works. So if a central bank intervenes, wait a day and then trade against it. It's just not, I've never seen it work. It may work for a day or two or three, but it just doesn't work. It freaks the market out, and then the market regathers and says, what? And then just sells right back. So anyways, that's what's going on. That's what I'm thinking. So, should I bail on that? Well, I don't like throwing pips away. Okay, so, oh no, look at this chart. So, let me get this all set back up. I have it so zoomed out. There you go. So do I really need to freak out? Right? Or should I stay calm and stay focused on my plan? Well, I just made 20 pips while I was discussing my setup with you. Right? Some guys work all day to make 20 pips. I just made 20 pips talking about why I shouldn't get out of my good trade. Now that's a lesson. So yeah, I'll get out with 250 and I'll just try again, but I hope we don't get there. But I suppose at that point, So, hey, decisions need to be made, that's all. And I'm going through it with you live. I know I'm such a dweeb. With no self-esteem. All right. So that's that. That's our friend the euro. Should we pay attention to the stock market? Let me clean up my charts. So what's the plan? Do you guys remember we did this a couple of days ago? If I really zoom out, there's a macro move. I think I even need to go out to a 4-hour chart for this one. Okay, so we've been doing this one for weeks now. I believe when we were at this double bottom, I was talking about if it broke through there, it's a hell of a long ways down, and I'd be kind of dumbfounded, like I wouldn't know what to do. Maybe we are in some serious trouble. But anyways, it rallied up like it should, fine. Dropped down to the 50%, but it's just a roll reversal, just like we would trade on like a 1-minute chart. This is a 4-hour, worked out exactly the same. And this is how we trade a currency pair, except this is the S&P 500. Still went up like it's supposed to. So maybe, just maybe, traders in these two asset classes trade a lot the same. What do you think? Okay, so that we had that going on, and then if you zoom in, I was teaching you how that the same pattern repeats at a smaller level. Do you guys remember this? Right? So it came up into a resistance area, fell back down to our old support area, and should go up. As you can see, I drew all of this. I think we were just testing this area here. I drew all of this to talk about coming back down to the support. I have it coming down to the 3A2, and then extending in the direction of this macro move, which we already had a week before any of this happened. Right? So we got the macro move and then what I would call more of a micro move. This is more like the hourly chart or 15-minute chart doing its cycles. So each one of these areas is a day, right? Here's 1 day, 2 day, 3 day, 4 day, so on and so forth. And then the bigger move on the 4 hours, more like weekly moves. You know, 3 weeks up, 1 week down, 3 weeks up. So more macro. And there we are in that process. Look at that. Right to the bottom of the elbow here to the hand. Isn't that cool? And we did this, when was it? This is Monday, right? So we must have done this Tuesday. It dropped on Wednesday and gone. Pow! Isn't that cool? So multiple things going on here. Fractal geometry, it gave us the same pattern on the 4-hour as it did on the 15-minute, essentially, if I zoom in, macro and micro. Price action behaved the same way on both macro and micro, but also the same technique or tactics, if you will, since my book is Strategic and Tactical Forex Trading, the same tactics were used on the S&P 500 as we would use in the Euro USD. It's fascinating, isn't it? If you really stop and think about it, right? The S&P 500 traders have a lot in common to Euro USD traders. Now, if that's going up, you notice that I have the S&P 500 on my profile for Euro USD, because that suggests if the S&P 500 goes up under current market or intermarket correlations, the Euro USD should go down. Okay? So I'm trying to be patient. You make me want to be a better trader. Okay? Okay, Gino says, what do you expect from the U.S. jobless claims today? That don't matter none, son. Yeah, no, none of that matters anymore. So the FOMC said to us in the meeting minutes, they left a little message, a little memento, because they knew it. Everything gets recorded and gets released a couple weeks after the Fed meeting. And they said they're going to raise interest rates in December. So like, okay, well, what do we look at economic data for? To help us predict what the Fed's going to do with monetary policy. So once we know what they're going to do with monetary policy, who cares about the economic indicator? We already know. The only thing that would be worrisome, Gino is right, is if it dropped to like 0. we lost jobs last week, Well, okay, look, even though we've been averaging a hardcore trend for years now, yeah, if that suddenly stopped today, that might freak the Fed out. But look, we have very, 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 very strong trends. Look, we're near full employment. We talked about this yesterday. It's more of a structural problem now. Because I'll say there's full employment, and other people immediately jump in and say, "Oh, well, there's only full employment because the government's not counting a lot of people." Well, that's true. They're not in the labor force because they haven't even looked for work for years and years and years and years. So they don't get counted as being part of the labor force. So you say, well, then that's lying. Well, A, why aren't they looking for work? A, they don't want it. B, they can't do it. If you can't do it, if it's a skill thing, then that takes a while. You need to get retrained, or we import someone that has the skills. That's another way of doing it. But there are jobs, and 95% of people that want a job have a job. I didn't say it's their dream job, but they're getting paid, right? So that's how that's what it looks like in the U.S., right? So we're not even worried about employment anymore. We're at full employment. If you want to be, when you look at weekly claims or monthly employment situation report statistics, what you should be looking at is the hours in the work week. You should be looking at wages, and income. Because what happens when you have a steady increase in income? What would an economist tell you? If you have steady and stable increases in income, what happens economically? You spend. Thank you. Steven says increased spending. Right. Yes, you spend. All right. Which then means if you spend that in your domestic economy, then those factories need to work even at more capacity, to the point where suddenly maybe you got to add capacity or add technology so you can be more efficient, but at some point you can't do it. You can't become more than 100%, right? So you need to hire more workers or build more plants or buy your competitors, or, and so you get scarcity of resources. Your scarcity of workers, scarcity of time, but all of a sudden then you got to fight for inputs, right? Iron ore and coal and steel and copper and gold and silver and palladium and all these things that you need to make a product. Suddenly everyone needs it because everyone's building stuff because, consumers are spending and, driving prices up, and there's your inflation, right? Well, we're not really there, but what as now macroeconomic investors, which traders are, I'm not so worried about the weekly jobless claims number. And they're really, honestly, how long have I been doing this? A long time, right? I've been over 10 years, right? There's only been a short window of time in those 10 years that I actually really cared about weekly jobless claims, or let's say saw weekly jobless claims be important enough to the market that it would move the market. And it was this period of, recovering from catastrophic job losses. Okay. But, there's many years before that it didn't matter. Now, really, I don't think it really matters. But what we do want is we want to see wage growth. We want to see income. We want to see consumer spending. You want to look at industrial production capacity utilization statistics and track those trends, whether they're up, down, or sideways, and put that into a global scale. And that'll tell you the health of the United States, which is 70% of its own economy, which is fine. The U.S. can survive on its own. But what about other economies? And again, I think the Australian problem, Australia says it's China, and China says, well, look, it all comes back to Europe. So I would start looking at that. I'm more interested in jobs in Europe and income in Europe and spending in Europe and so on and so forth. Okay? So for you Americans that are filthy, stinking rich now compared to the rest of the world, first of all, you don't feel that rich, do you? Yet you're filthy, stinking rich compared to everybody else. So why don't you help Germany out by going and buying yourself a Mercedes or a BMW or Lamborghini or a Volkswagen? Get yourself a Volkswagen. And just to help the world out. Hey, just be kind. Buy yourself. That should be the new slogan, right? Mercedes, be kind to the world. All right, so there we are in that process. Yeah, I bought this Lamborghini not because I'm arrogant, but I'm just trying to help out Italy. You know what I'm talking about? Because of my kind heart. I know, we all have weaknesses. Just pitching in, yo. Have you ever seen an American get into a Lamborghini? It's pretty funny, actually. Ooh, the steering wheel's a little tight. All right, what's going on? Platform freeze. Oh, here we go. All right, we're back. Yeah, yeah, that's right, Martin. Yeah, I know, but for the greater good. Everyone's got to have a cause, right? All right, so gold, I have you set up short on gold. There's the 4-hour short off of old support, becomes resistance, 382 Fibonacci retracement. Gold coming down in a burning ring of fire. Cool, huh? There's our top, which we drew yesterday. Le flétolium. Lower low, lower high, lower low, lower high. So just like we trade anything else, you know, have a fundamental bias first. What's your fundamental bias? Mine is down. I've been selling gold for years and years and years. All right, so double tops off of my predicted. Look at the gray zone is what I drew based on old support. And this 382 obviously is resistance. Right, because I have this in a downtrend and I use a Fibonacci study. So I'm like, oh, look, a double top at a roll reversal, kicking off my 382. Do I short the double top? You could, you don't have to. But once it makes the lower low, so let me use my drawing tool instead. Okay, so you should mark this sucker up. Okay, and what you should say is when price breaks below that, okay, so you're down here now. What you would do is then you would go and you would draw this old support resistance area, okay? You would draw that then. Then it retraces over the course of several hours. It comes back to the 21, comes back to this. And this blue area is your sell zone, okay? So you sell it, and guess what? It makes a new lower low, lower than the previous low, which I have highlighted in a circle. So you take the bottom of that support, you drag it across, and this area should be a short zone in the future. So you can see price does come back and comes pretty close. Okay, it's a guide, and then what does it do? Yeah, sure enough, it falls. Are we currently lower than the previous low? Yes. So you would drag this across, and we're now touching, if this trend continues, we are touching the new sell zone, as they say in Italy, huh? Etone, where's the sell zone? Right, that's the sell zone. All right. That's just on that time frame. Okay. Oil, as George W. would say. I'm an oil man. All right. And there we are. Now look at this line that I drew a couple of days ago. Check that out. We're touching it like right this second. Do 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 do. Yeah, yeah. All right, so we'll see what happens here, huh? Loufle. Amazing, huh? That's a 5-minute chart. There we are in that process. Okay, that's the hourly chart. And there's the 4-hour chart. Follow this thin line here. That's the bid-ask line. That's where we are now, huh? So you see this, the orange line I have? If I zoom in, that's obviously old support. I have that as a sell zone. I thought there might be a chance that, you know, oil comes up to 44 and then dump it. Never got me on 43. Oh, yesterday's low and high and stuff. Yeah, I use a custom indicator for that. Something I bought. It just plots it out. Yesterday's low, yesterday's high, and stuff like that. No biggie. Okay, we did the S&P 500 already. You guys want to look at yen yen? Yen yen is just slowly moving sideways to up, isn't it? Do we even need to cover yen yen? We can cover beast. Beast had a good day yesterday, huh? You know, let's go to a beast profile. Pound yen. Whoa, here we come. Watch out, boy. It will chew you up. Oh, here we come. Pound yen. Oh, here we come. Watch out. Yeah, the beast will eat you up. Okay, 15-minute chart. The predicted aggressive, right? The extreme top of the week is predicted to be right there. What happened today? Look at that, huh? Holy smokes, eh? WR2, weekly R2, right here, and that, oops, and that's the predicted top for the week. And look what price did. Who's that ready? Wow. Lower, big drop, lower high, big drop. Okay, at this point, you should measure this low to this high. Okay, you should measure that with a fib pointing down. Right, and you're going to get sort of a down, an up, and a down. Is the plan, Stan? So let's do that. I mean, is it possible that the pound yen would reverse at a reversal pivot point? I mean, it's just not too complicated, right? Perfect 618, right off of a 188.50. We're back down to the 187. Got a pocket full of pips, and my homeboys do too. So anyways, yeah, back down to the 187, huh? Funny thing how the beast will do that. If you're slow in the beast, it will slaughter you, right? You really need to know, right? You're either a bull or a bear or a pig. What happens to pigs? Yeah, pigs get slaughtered. And it's funny, like pound yen will always expose your vulnerabilities. Amazing. So anyways, just fast and furious drop. Okay, be interesting to see what happens here. I kind of feel like we're neutral here. Bulls and bears are in the market together, and I don't know who's going to win this. I think it could go up as much as I think it could go down. But let's do it this way. If I, you know what, let me zoom in. Come on, drawing tool, let go. There we go. All right, zoom in a bit. Want to make myself clear. I think if I was a bull, I'd be eyeballing this area for opportunities to long. Oops. Okay. But if I was a bear, I'd be eyeballing this area here to sell. And this is what I said. You're either a bull or a bear or you're a pig. Okay. So you're either getting ready to go long low or you're going to prepare to sell high. If you do anything else in the middle, you're just a pig. You're just chasing price, squealing away, making a lot of noise. You know, I don't even know who's going to slaughter you, whether it's a bull or a bear, it doesn't matter, but you're going to get slaughtered. Okay? So know where you stand in the market. All right, any requests? What's on your mind? Talk to Uncle Wayne. Pound kiwi. Okay, pound kiwi. I don't even know. I don't think I have a pound kiwi. I'd have to do something special for you. I don't know if I want to do pound kiwi. You know, I think I'd rather do pound kiwi when the daily chart's in an uptrend. I guess the 4 hour's kind of in an uptrend, but it's slowing down. We just kicked off reversal pivots. I think pound kiwi might have been better yesterday, but I just showed you we've already printed the top of the week on pound yen. So that might be it. Who knows? That might be it. Maybe not, but you know, between where we are now and up here, there's uncertainty, right? I mean, this could go up for a while, but like I said, if I was a bear, I would sell it. I want it to go up so I can sell it. So, you know, like I said, I'm basically neutral on this, and I'm bearish on the kiwi, but I don't want to pair up something I'm neutral with and something I'm bearish on. So, you know, blah. I don't know. How about, can we cover kiwi versus dollar? And, you know, dollar just got its butt kicked yesterday, so there might be a setup there, if that's okay, if you don't mind. Okay? I'm trying to show you, though, it's your job to line up strong versus weak, not mediocre versus mediocre, or strong versus strong, or weak versus weak. Or mediocre versus strong, or mediocre versus weak, right? Strong versus weak, bull versus bear. Okay, so I'm just, if you don't mind, maybe that's part of the lesson. Why is the kiwi weak? Is that a philosophical question? I don't know. Hang on. You know, I covered Kiwi on Tuesday. Hang on. Let me go to Forex.Today, eh? You should maybe watch this video. Hang on, let me load it. All right, Forex.Today. Let me go to featured posts because they're mine. Featuring my cows and kiwis. The hidden relationship, dairy prices, and the New Zealand dollar. Why don't you watch that one? And I'm sure I talk a little bit about the kiwi in there.
This can have a dramatic impact on the Kiwi dollar. So let's trade
So
that
I'm actually
once again, thanks for being
I'm covering the release of the global dairy auction numbers in real time. Okay? And I'm sure I talk about, I can't remember what I talk about, but I'm sure I talk a little bit about the kiwi, and you're going to see the trend. But now the interesting thing is, I'm a bear on this, and if I go out, add a little more time, oh, I can't. That's right. There's a print error. All right. You can see, generally, it's been down for quite a while. We had this nice little move of recent, right, of late. But it's been pretty much down. I mean, this is a day chart. Look how many days it was straight down like a rocket, right? So that's one thing that's going to make me bearish, right? But then I have this setup here where we had this big rally. It did make a higher high. So as you can see, I have it coming down to about our price now and then rising up to the next level. Stokes looks like it wants to do it too, doesn't it? But look how many days it's been down just even in this more recent move. You know, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30. At least the last 30 trading days, which is 6 weeks, right? There's 6 or 7 weeks of trading where if you sold, you probably did all right. But now, we're in an interesting spot, and it still hasn't disproven the possibility that this could go up. But I still wouldn't buy it, even though I have it predicted going up. Okay? Can you see how I have it drawn? The reason I would never buy this pair is because I'm bullish on the US dollar. But if the Kiwi dollar started going up versus the US dollar, there's a pretty good chance it just might be that the Kiwi is very strong. It might be the dollar being weak, but I don't want to think that way, right? Because I'm a bull on the US dollar, which means I'm a bear on this pair. So if this pair turns bullish, which I think it might do, then I don't buy Kiwi dollar. I buy Kiwi yen, baby. By the way, come on, load, Bubba, load. Got too many things going on. My poor Xeon processor is slow. I only have a quad core. All right. Yeah, it's still about the same. All right. So then Kiwi yen is the one I want to go long on. And what do you think? Should we buy near the monthly central pivot point? What do you think? Should we do it? Well, let's say you lose a lot of money on this. Let's say you put money on this and you lose it. What could you explain to the judge and jury? What could you show as evidence that you were not negligent? What could you say you did? Oh, but, Your Honor, members of the jury, I looked at the pivot points on the daily, I looked at the pivot points on the monthly, I bought a 50% retracement, I looked at the oscillator, I bought a retracement off of a higher high, blah, 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 blah. But you need evidence that you just were not, negligent with the money. So imagine this. Let's say you go to your father-in-law. Uh-oh. Okay? You go to your father-in-law and you borrow a bunch of money. What would you explain to him if you lost it? Yeah. See, we tend to be okay losing our own money. Here's what a lot of people do. They say, oh, I want to get filthy stinking rich. How do I do that? Oh, I saw something on TV about Forex. I guess I'll become a currency trader and I'll become filthy stinking rich. I'll put $5,000 into a trading account, and if that account blows up, I'll just go find something else to do to become a millionaire. And guess what happens with the $5,000? You'll blow up the trading account because you already told yourself you'd do it, and you're totally okay with it. Right? What if you said, I'm going to put $5,000 in a trading account, and every time I lose $1,000, I cut off a finger? Would you treat it a little differently? Yeah, Lucas, good plan. I mentored somebody, and he had a particular problem. I can't remember what it was. This was a very long time ago. And I told him that he needed to bring his wife in on the conversation because he was having trouble, struggling. He was okay losing money, but he wanted to be successful. Okay? So I said, well, you need your wife's support on this one. And you need to feel some shame, because shame is usually a lot better than losses, because you can lose money but never tell your buddies, right? Hey, dude, how's that Forex thing going? It's just not my thing. You're not going to say, oh, well, I blew up the trading account because I had no trade plan, no patience, no discipline. I blew it up because I'm a loser, right? You can't say that. You're just not going to say it. Like, it sucks. It's all about the big bankers, right? So what I said, I get the wife on the horn, and we're talking about the things he's going through to learn. And I said, in certain situations, the trader, if he made a certain mistake, that he was going to sleep in his bathtub, and that she had to be cool with that. Like not only is it uncomfortable for him, but it's also shameful. Like, she would just know, like, when he's like, honey, where's the pillows? I'm setting up shop in the bathroom, right? You would know when he grabs the pillows and the spare blanket that he's off to the bathtub, and he's going to sleep in the bathtub. And there's a certain discomfort with that that's worse than losing money. Because you know what? How many days do you want to sleep in a bathtub before you just stop doing the bad behavior? Right? I've made someone else sleep on their kitchen floor. Actually, the very first time I did this with the trader, I made him sleep in his car. And then he actually did it. And then I realized, there could be some liability issues there. Like currency trader freezes to death in car. But you know what? I'm trying to change behavior. Right? You have to change the behavior. It's all part of the neuro-linguistic programming, if you will, where you have to reprogram your brain. And most people start as currency traders like they start anything else, prepared to lose. They almost have a game plan in the back of their mind at how it will be okay if they lose. It's okay if I lose. It's like one of these things, where you read about how successful people fail like 9 times, 10 times, 100 times, and you're like, yeah, I'm failing too, and it's okay. No, 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 no. It's not okay that you fail, especially if you're doing a lame job of trying, right? I threw down a bunch of trades at Forex, blew up my $5,000 account, moved on. That's not trying, dude. That's not trying at all. Right? So you need to change the behavior. You need to change the thought process. And it's very serious, right? So anyways, so what evidence would you have to the judge and jury that you were not negligent? Could you write, let's say a one-page essay on why you would buy, or let's say why you did buy the New Zealand, the Kiwi yen on this chart? Could you think of, let's say reasons why your fundamental bias is up for the Kiwi? Why your fundamental bias is down for the yen? Okay. Your technical analysis of the daily chart, so your technical of the daily. Maybe your technical analysis of the 4-hour. What about the weekly pivots and monthly pivots and daily pivots? Do you see any patterns? What about the fib? What does price action tell you? Okay. What does the oscillators tell you? So on and so forth. And just what is it where you're very confident that you'd make money on this? Right? Wouldn't your trading be a little bit better? It's like when I tell people you shouldn't be shocked that you make money, you should be shocked that you lose money, right? Sometimes things just don't work out and you're like, wow, that's surprising. Who bought it down there, right? But okay, so there's oil kicking off the 21. I noticed some people are saying, holy oil. Okay. Whoa, ho, hey, oh, hey, oh. Yep, pretty nice stuff. Look at that, I made another 10 pips while we're coaching. Nice. Okay, any other requests? What else is on your mind? How can I help? Sure, Gino. I also wrote a book 8 years ago that goes over everything incredibly detailed. And let's see. Let me see. Well, this loads. Let me check Forex.Today for something. Yeah, it pulls up my book tour. Let's try this. Advanced Forex Trading Strategies. How about this one? There's a good place to start. And there's no video. Dope. I know why I did that. I think this is the book tour, though. That does the same thing. Well, hang on. If it's not there, I don't think there's any harm. I can send you to youtube.com/fxbootcamp. There's a couple of thousand videos up there. yeah, I said that right.
US markets
A couple of thousand videos. Let's see if there's one here. Strategic, tactical. Timing of the trades. Videos of 2008. All right. Well, you know what? I'll hunt some down, and I will post a video on Forex.Today for you. Okay? I'll do it by the end of the day. Okay, Gino? I think I have a video somewhere. It's like 1 or 2 hours. Of my general trading strategy. You know, I think I make $5 if you buy my book. The other $40 goes to the publisher. But you could always buy the book. Forex.Today. Baltic Dry Index. Yeah, I can cover that now. But also, I believe I've referenced it quite a bit. So let's do that. Baltic Dry Index. Let's find out what's at Forex.Today. How about this? Baltic Dry Index and trading the Aussie dollar. Would you like that one?
Marina's been doing very well. Congratulations, Marina.
Cool, huh? So you ask, I deliver. I deliver dreams and realities. All right. Initial jobless claims came out at 271. Canadian wholesale trade, basically the same, no change there. Holy smokes! Did anyone update me on where are my South African friends? Where's my Czar brother and sisters? Philly Business Outlook 1.9, much better than expected. Where are my Czar brothers and sisters? Holy smokes! They just unexpectedly raised interest rates. Holy! They threw it out there in front of the Fed. South Africa just 10 minutes ago started to front run the Fed. What? Holy moly! Let's take a look at that one, man. I don't even have a ZAR chart. It's been years since I seriously traded ZAR. Hang on. All right, that's unexpected, guys. Holy smokes. Wonder if we're going to have reverse currency wars in some case, right? So South Africa is worried that when the Fed raises interest rates, it's going to increase inflation in South Africa. That we might have a nice little currency trade or carry trade brewing there. I haven't traded ZAR in a long time. Used to be something I paid a little more attention to. Do we not have it? Never even looked at it. Noki, Sikh, Turkish lira. No ZAR? No, it doesn't have it, huh? No. Yeah, like I said, I haven't really seriously looked at it in many years, and it's not a heavily traded one, but it used to correlate very nicely with gold. And I have a feeling that this is going to break to the other way. So, okay, so maybe that's why, huh? We don't even have it at TradersWay. Just it's a low the liquidity providers are the ones that probably don't have it. Right? That's what it comes down to. If we can't get liquidity for our clients, then what's the point? Right? So, anyways. So, no, we don't have ZAR at TradersWay. Too bad. Too bad, so sad. But a ZAR yen could be a nice carry, right? So they're raising interest rates now. How cool, man. They snuck that one in there. At 820. Come on, South Africa. By the way, you're a currency trader when you watch a South African central banking meeting live on the internet. And it's great because, no disrespect to South Africa, but it looks like watching TV from the 1970s for some reason. It's let's just say it's nothing spectacular. Why would it tank? No, it would go up in value, guys. So I can't see it, so I don't know what it's doing. But no, I would suppose the South African rand is going to appreciate. Oh, well, where do I get the news? It's part of my omnipotence. I just know everything at all time, in real time. No, yeah, I use tradethenews.com, and I'm omnipotent. But there's a little pill for that, don't worry. Yeah, good combo. So cool, man. Aussie dollar trying to find some stability on the bottom of our channel. That's interesting. Pound dollar kicking off of that old daily support that I had highlighted a million bajillion years ago. That's interesting. Look, if we're going to make our way down, it needs to fall pretty soon, right? So you can see I have this dropping, and it looks like that. So we got a ways it can go, but if it breaks above this, we know that that's failed. And I don't expect this to fall forever, but that's the plan that I have set up, obviously, as you can see. Let me zoom in again. Okay, and that predicts if you're just pure technical, that does predict a big drop. But as you know, in about 10 weeks, I'm expecting unexpectedly good news out of the UK. So I'm thinking more like a double bottom and then rise. Oh, you want to do S&P 500 again? End it there? Yeah, sure. Why not? Yeah, Guy, but that's the only thing I'm talking about is ZAR yen. I don't know what ZAR Swiss franc. I don't think I've ever traded anything besides ZAR yen. Maybe ZAR, USD ZAR or something, but I would only assume ZAR yen. All right, so here's what I did earlier. Okay, can you see the pattern? Buy it at support, up. Oh, you know what? This is interesting. I drew this. You're not going to believe me, are you? I drew this in like July or August. I know you're not going to believe me, but we were here. If it found support, it would go back to the old resistance, catch its breath, and then make higher highs. Can anybody confirm, going back that far, that this is something we did in the summer? I guess it's August 1st maybe? We were talking about the headwinds, if you remember, right? That there's a headwind that we talked about how money managers make money in the U.S. stock market. We talked about the third week of August when investors come back. We talked about the mutual fund Monday in the first Monday after non-farm payrolls in September, so on and so forth. Wow, so I haven't actually opened up this particular chart since then. And the logic is it's got to hold at this support or it's like seriously way down, guys. Let me back out a little bit. If we broke below that, it's like the end of the world for the stock market. I mean, there's a difference between a decline and a crash. And we were pretty close. We were pretty close. But, I have it highlighted like it kind of has to go up because what's plan B, guys? Right? Can you see that? Like, what's plan B if that breaks? Then we got to talk about, like, this level. Like, what? Holy smokes. That's a daily chart. That means it'd be down for 6 months to a year. No, well, that ain't going to happen, right? So this had to go up. So I talked about, it needs to go up. It has to go up. More people are going to make money if it goes up than if it goes down. Right? I hope, right? So it goes up to resistance, which is, predicted here. But I swear we hadn't done that yet. We were still down here when I drew this. Otherwise, I would have drawn the double bottom higher high, right? And by the way, just to point that out, this is the roll reversal. Right? Nice little buy a couple of days ago. Look at the Stokes crosses. Just lovely, right? Lovely to your mum. So anyway, so it comes up, then it needs to retrace, and then it needs to extend. As it retraces, it grabs some more bulls, right? And that's kind of where we are now. Isn't that neat? We just made that dip. Maybe, hopefully. And maybe in the next couple of weeks, 2-3 weeks, between now and December non-farm payrolls, this heads up. What's the resistance point? The top, Sarah. The top. How about the all-time high? That. Remember the point of which we had never been before? That one. Yeah, the top, dude. Right? So anyways, that's kind of cool because, you know, we do look at the S&P 500, but I have about 5 or 6 or 7 different S&P 500 charts. I just haven't opened that one on this profile since then. I mean, that's what we did in August, the first week of August, when the sky was falling. You guys remember that? Sky was falling, and oh wow, now, you know, the Fed, what's the Fed going to do with the stock market coming down, and blah 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 blah. Well, what's really probably happening is that portfolio managers back then realized the Fed was going to raise interest rates either in September, October, or December. Do you guys remember that conversation? We got to the point where the Fed was going to do it. The only question was when. So you're a portfolio manager. You have billions and billions of dollars in stock in your portfolio of client money, right? And you realize there's going to be a change in central banking policy. And you might be heavily weighted stocks that benefit from zero interest rates. Some stocks are going to benefit greater than others, and some are actually going to be hurt by that. Okay? So what you need to start doing going into that September meeting is you need to thin out your, some profitable trades on the stocks that have benefited from monetary policy over the last, let's say, 5 years. You need to start getting out of those and going to cash, and then waiting until confirmation that the Fed's changing their policy, and then you need to start buying stock of companies that will benefit from higher interest rates. For example, banks make loans, right? They borrow money from their depositors, and they invest that money or loan that money out to businesses and to consumers at a higher interest rate. They're carry traders, right? They're short cash, they're long the debt. So now interest rates are going to go up, and there's an ability to charge more money. Nice, right? So banks might be able to benefit from that. So you have to find out, like, who's going to be hurt by higher interest rates now that it's virtually guaranteed, and then who's going to benefit, and start rebalancing your portfolio toward the new monetary policy. Right, guys? So very often, I think if you want to know what that looks like, because, I have to read into it. I don't know what caused that. People got out of stock. Why? And then it rallied up. Why did it rally up? By the way, this is the September Fed meeting. So maybe they went to cash here, and then they're buying into the other new stock that would benefit from the new monetary policy. You see what I mean? And it's just shifting money. They're in certain stocks here. They cash out of some, not all, and then they buy into the new portfolio. And they just have a new portfolio strategy based on a change in monetary policy, and really a different economic outlook or forecast for the next 5 to 10 years, right? Because you can't compare 2008 to 2014, let's say, right? You can't compare that 5 or 6 years. You can't compare those years to what the next 5 or 6 years are going to be like. So how are you going to make money in those years? And I think that's all that's really happening. And like I said, if it broke below this support line, very, very few investors would benefit, right? Way more, probably 90% of people in the market benefit when the market go up. So the market wants to go up. The market wants to defend its line, right? That's the Alamo, man. Without that, right, all hell breaks loose. Yeah, so 325. Is that right? Yeah, about that. So cool. I made 25 pips while we did this webinar. Cool. Thanks for being on my team, guys. Tomorrow I'll be at ForexStreet.com. I'll put this video on Forex.Today. I'll also upload that 2-hour, I think it's a 2-hour video. I might only have a 1-hour video that outlines my general trading strategy. Strategic and Tactical Forex Trading is a book that I wrote. It was a bestseller, actually, for 4 years. So you can also buy that. I don't know if you have $40, but you know you're not going to make me rich. But you know you'll buy me a coffee if you did that. So, anyways, peace on earth. May the pips be with you. May your profits be above average. And I'll see you tomorrow at FX Street. Oh, and you know what else I did? I believe, yes, I scheduled a live event at the Forex.Today YouTube channel. It was something I wanted to test again. I'm going to cover the open of the S&P 500. I did it yesterday just sort of as like a live event, but what we did this time is it asked me to schedule an event, and I think you can sign up at the YouTube channel. Is it here? Ah, that goes to the wrong one. Hang on. Forex. Just go to YouTube. You can go Forex.Today. Okay. I click that. And, oh yeah, see right here? Thursday, 9:15 a.m. You can click this and it'll send you a reminder and a link to the room and stuff. Do you want to attend? Yes, there will also be a chat. There's a chat, so you just click here and there's a chat box. It's an upcoming stream. See, it starts in a half an hour. Will you swing by? The chat is up here in the right-hand corner. Yeah, do you want to try that out? It's just something I'm playing around with. And of course, while you're there, subscribe to the channel. Make the world a better place. You know, subscribe to the YouTube channel and buy a Mercedes. Don't do it for yourself. Do it for the poor Germans that need your money. All right, so I'll see you later, guys. Thanks for being on my team. Joseph says the resolution's bad. Well, it's going to be based on your resolution. But I did a test yesterday.
At 5.5, I gave it 5.5.
And, you know, that's not bad.
Then it leaves. 5 gave it 5.5.
Right, that's not bad. I mean, look at that. I can clearly see it. It's 1080p, guys. So it just depends on your YouTube settings, right? You can change the theater mode. You can change the HD quality. You can change it to HD. So all I'm saying is if it looks bad to you, change your settings because it's coming through at high definition. You could watch this on your TV if you wanted to. Yeah. So you can just make your own tweaks, right? Cool. So I'll see you online, guys. I got to roll, got to upload this video and all that kind of stuff. I'll see you in a few, huh? Cheers.